Exactly 2 decades back, in April 2004, we urged Equitymaster subscribers to consider buying the stock of Asian Paints for the first time. Back then, the company was beginning to see the impact of higher crude prices on its margins. Competition from entities like Goodless Nerolac, Berger Paints, and Sherwin-Williams was stiff. To add to that, Asian Paints' foreign subsidiaries were incurring losses due to exchange rate fluctuations. But the company's success in inorganic growth was evident in domestic and international markets. Use of technology for the tinting machines became a game changer in decorative paints. The management's foresight was evident in the company's tie-up with US paint major PPG. Also, the timely diversification into industrial paints and automotive paints saved the day for Asian Paints when the decoratives took a backseat. Asian Paints had been one of the earliest companies to buy a supercomputer. But the company's capex plans did end up being ill-timed during the economic meltdowns. For instance, after announcing heavy capex in April 2008, Asian Paints saw its stock price crash by almost 44% between May 2008 and March 2009. The reason I am recounting this is to remind you that companies like Asian Paints do go through temporary rough patches, and these do erode shareholder wealth temporarily. But the question is whether the rough patch should be considered as a permanent damage, enough to completely write off the stock. As per reports, Aditya Birla Group-led Grasim Industries is set to disrupt the oligopolistic Indian decorative paint industry. The company is expected to leverage its strong distribution strategy and manufacturing prowess in cement and metals. Under its paint brand Birla Opus, 6 plants are set to come up on stream by the end of 2025. Collectively, these plants would expand the domestic paint industry's current capacity by almost 40%. Needless to say, the new capacities will keep margins under pressure for most paint stocks, and Asian Paints could also see some of its market share getting cannibalized. But can a new entrant be a reason to write off a business that has endured cycles and competition for several decades? So, what explains the feverish attempt by stock market participants to write off Asian Paints? And how exactly do they feel confident of the incumbent, that is Grasim, grabbing market share and becoming very profitable in doing so? Well, Warren Buffett, in his latest letter to shareholders, wrote this. He basically once again explained such situations with his trademark historical references. I could have not explained the frenzy to dump the stock of Asian Paints any better. He wrote, for whatever reasons, markets now exhibit far more casino-like behavior than they did when I was young. The casino now resides in many homes and daily tempts the occupants. One fact of financial life should never be forgotten. Wall Street, to use the term in its figurative sense, would like its customers to make money. But what truly causes the denizens' juices to flow is feverish activity. Buffett's assessment of the American stock markets and the American investors aptly fits into the Indian markets too. There is no doubt that Grasim will do everything possible to make its presence felt in the Indian paint business. The Birla Group has made attempts to dethrone the largest players in the telecom business in the past and may try doing so in the paint business too. There are speculations that Birla Opus brand will have more than 145 products and 1200 stock keeping units. Also, the brand could offer 10% additional quantity in most water-based paints during the promotional period. To establish its brand value, the company will also be offering a 1-year warranty for enamels, wood finishes, incentives for contractors, and free tinting machines. There is no doubt that such moves will hurt margins and volumes for most large paint companies in the near term, especially Asian Paints. But Asian Paints began diversifying into non-paint businesses a decade back. From modular kitchens to sanitary ware to wallpapers, furniture and home decoratives, the company is now a complete one-stop home decor solution to customers. The company is also undertaking capex to produce next-generation environmentally friendly paints. It has signed a definitive agreement to acquire a majority stake in a specialty chemical and next-generation nanotechnology player. This tie-up will enhance the company's technological capabilities across all products. So while Asian Paints' market leadership and supply chain prowess is well known, investors have chosen to ignore the stock over the past 2 years, especially ever since there have been reports of new competition with deep pockets. Not just the Birla Group but also JSW Group, Pidilite, etc. entering the paint business. Even as the benchmark indices trade close to all-time highs, the price to earnings and price to book value multiples of Asian Paints are near the stock's 10-year average currently. While the multiples themselves may not be cheap, they certainly signal relatively lesser downside risk for the stock. Also, when the investment returns from the stock of Asian Paints are compared to that from the Sensex, the stock has grossly underperformed over the past 2 years. It is rather rare to find stocks like Asian Paints trading at such valuations relatively to the long-term averages. So, as an investor, you must ask yourself, what are the chances that the stock of Asian Paints could repeat history? Grasim may certainly be a company to watch out for in the paint sector, but write off Asian Paints at your own risk. Hope you like this video. Thanks for watching.